Okay, the recording has started. I think we're ready to rock and roll. All right, ready to call the meeting to order? Audio's on, Helen? Okay. Darn it, I can't hear you, Helen. I'm sorry.
That is because I was on mute.
Okay. Yeah.
I could hear myself.
Okay.
Yes, you called the meeting to order at 2:13 p.m. Next slide, Link.
Meeting of the Audit Committee is called to order at 2:13 p.m.
Right. And I certify that the meeting was posted in accordance with the Texas Open Meetings Act.
Okay, thank you. Public comment. Helen, do we have anyone signed up for public comment at this time?
No, we did not have anybody sign up for public comment.
Okay, thank you, Helen. Next item, please. Review audited financial statements presented by independent auditors. Welcome aboard, guys. Fire away.
All right. Can y'all hear me?
Yes, sir.
Okay. All right. Well, my name is Greg Peterson. I'm the engagement partner on the audit, and it is my pleasure to present to you today the results of our audit for the fiscal year ended August 31st, 2020. Link, can I get a slide? Another one? So just some quick introductions of the people that are attending the meeting today. Myself, again, the engagement partner, and I have Brittany Drew. Brittany, if you'll wave. Brittany Drew is the engagement manager on this engagement, and she is responsible for assisting me in reviewing all the audit work papers and also keeping all of our staff on track and moving the engagement along in a timely manner. Next slide. Here's just another graph of the audit team. In addition to those folks that we just mentioned, we have some other folks that do things behind the scenes that often you can't see and the staff at the college can't see. But we have Rima Parapilli and Elisa Gilbertson. They help us on the back end with some IT analysis and data analytics. We have Sarah Dempsey, who is an audit partner in our Dallas office, and she is actually the quality control reviewer of this engagement. All of our governmental audits undergo a second quality control review. It's just part of our internal QC requirements. And Tiffany Kaufman was the senior associate, also helping lead the charge for this engagement. Next slide. Next slide. So just going into a little bit into the audit process. So first we have the audit cycle. So as you can see from this slide, really it's a continuous cycle. Really it starts with our initial audit planning. Then we start interim field work in July. That moves into our final field work from October to November. Obviously, we get to December, and we are ready to present and issue the audit report just in time to turn around and start everything back over again. So as part of the relationship and engagement with Weaver and the college is that we're really available year-round to answer any questions. And the college does take advantage of that. One thing we stress is that we just have open lines of communication between management and the audit team so that, if they do have issues in March, we're dealing with those in March and we're not waiting until, we're out here in October doing final field work. We want to be sure that we're addressing issues as they arise. And we've made that plenty clear to the management group and they feel comfortable reaching out to us if they do have questions regarding any accounting questions or reporting questions, due GASPs. Next slide, please. So just to get a little bit deeper into the audit process. So the audit that we conducted was done in accordance with generally accepted auditing standards. And because it's a governmental entity, we also audit it in accordance with generally accepted government auditing standards. In addition to doing an audit of the college's financial statements, we also perform a single audit, which is a compliance audit of the college's federal programs. And we conduct those audits in accordance with uniform guidance. And for state programs, we perform those audits in accordance with the Texas Uniform Grant Management Standards. So in addition to those two things, we also perform some compliance tests of the college against certain laws, provisions, grant contracts to make sure they're in compliance with those. Just an example of that would be we look at the college's compliance with the Public Funds Investment Act. We also look at some of the procurement policies and procedures to test compliance there as well. Next slide. So our audits are all based on from a risk-based approach. This allows us to focus our attention on those particular areas that we find most susceptible or that have the highest risk. The risk that we've kind of evaluated and determined for the college is the risk over the cash disbursements for payroll and other distributions. Obviously, cash in and out is one of the biggest transaction cycles within the college and really within any organization. So we want to be sure that we are focusing on the controls around those processes. The other risk that we identified was improper revenue recognition. Again, that's just a standard risk that auditing standards require us to use in evaluating the audit procedures that we're going to perform during the audit. Next is we also test the internal controls over financial reporting and compliance. So we do test internal controls. We obtain an understanding of internal controls. However, we do not render an opinion on the effectiveness of internal controls. The internal control testing that we do is just to assist us in reducing the amount of substantive work that we perform at year end. Again, already mentioned talking about testing compliance. And again, want to mention that, when we perform these procedures and we render an opinion, our opinion is just to provide, assurance that these financial statements are complete and not materially misstated. There could be errors within the financial statements that were not identified. However, based on our performance of our procedures, we were able to render an opinion that we think that these financial statements are materially correct. Moving forward. Continue another one. So continuing on with that thought process, we are going to render an unmodified opinion on the report. So this is the highest level of assurance that you can receive in an audit. Again, throughout this testing, we also evaluate compliance, and we didn't note any matters of non-compliance through our testing. We did not identify any internal control matters. We did not have any material weaknesses or significant deficiencies identified during our audit of the financial statements. As part of that, we have to evaluate any prior year findings related to these matters. So we did look at prior year findings regarding the internal control significant deficiencies, and we've determined that those have been corrected in the current year, so there is no additional reporting required for those findings in the prior year related to the financial statements. Can we go to the next slide, please? As I mentioned earlier, so we also test federal awards. We're actually in process of wrapping that part up. We have fully tested the student financial aid cluster. We still have a few open procedures for the CARES Act funding, and that was as a result of COVID. So that one is a brand new program this year, and the federal department that issued that money, they still haven't given us all the grant requirements, testing requirements. So it's a bit of a holdup regarding that. We've made as much progress as we can, but we should be able to wrap that up, within the next couple of weeks. Definitely fingers crossed that we'll get all that wrapped up. But just from where we are sitting right now, we haven't identified any control deficiencies regarding the student financial aid cluster or the CARES Act funding up to what we've tested thus far. So we have no material weaknesses, no significant deficiencies, and we haven't identified any non-compliance with those grant requirements. Next slide, please. So in addition to federal awards, we also test some state programs. The 2 state programs that we've tested are the Texas Education Opportunity Grant, also known as TEOG, and the Skills Development Grant. TEOG has been completed. The Skills Development Grant is still in process. Again, very similar to the federal programs. We haven't identified any material weaknesses or significant deficiencies based on the testing that we've done so far. We haven't found any instances of non-compliance with any of the state requirements as well. So again, hoping to wrap up this remaining state grant just as soon as we can. Next slide, please. So in addition to rendering opinion, we also have a audit requirement to make certain communications to governance. And through those communications, we want to talk about any significant estimates that are made by management. So all the significant estimates made by management we deem to be reasonable. And some of those significant estimates that I wanted to point out to your attention is the proportionate share of the net pension liability and the proportionate share of the OPEB liability, as well as depreciable lives of the capital assets and the related depreciation expense. So those are just some significant estimates that are included in these financial statements. However, based on the procedures that we performed, we do feel that these estimates are reasonably stated in the statements. Moving forward. Additionally, I wanted to communicate that there have been no material misstatements that have come to our attention. When we look at sensitive disclosures, I want to point to Note 12, Commitments and Contingencies. This would be regarding any loss contingencies, outstanding litigation, legal matters that may be pending. So just want to point that that's probably one of the most sensitive disclosures that we have included. Also want to disclose the fact that we haven't had identified any fraud or illegal acts as part of our audit procedures. There's no transactions for which the college entered into that there isn't some type of guidance or consensus. We've had no difficulties with management. No arguments arose throughout the course of our audit. We had no independence issues. And the management has not gone out for a second opinion regarding any of the conclusions that we've reached as part of our audit. Next slide, please. So strengths and accomplishments. So just want to point out some of the strengths of this year audit. Again, similar to last year, we had full cooperation of everyone college-wide, especially with COVID happening and this audit being conducted remotely, that really kind of changed the process up a bit, how we're used to making requests and receiving information. But everybody was on board and was able to provide us with information as soon as they could. So we appreciate the college for helping us move this thing down the road and helping us wrap this up. Also wanted to congratulate y'all for the number and a decrease in the number and magnitude of the adjustments. As I mentioned earlier, there were findings in 2019 regarding some internal controls and also related to some federal programs. There was an issue with return to Title IV and timely submission of some attendance data. However, we've gone back and looked at those, and those issues have been remediated, and we have not found, we have nothing to report for the 2020 audit. So that's a great improvement. We identified an issue. It was corrected in the current year. Fantastic. Also want to congratulate the college for receiving the Certificate of Award from the GFOA. That is no small task. So I want to congratulate the college there. And also just through that, receiving that award, all these reports that go to GFOA for review come back with, comments from the GFOA reviewer back to the college, finding areas of improvement. And from looking at the 2019 GFOA letter, there were no significant comments that came back from the GFOA reviewer. So that shows that this audit report or the financial statements prepared by the college really meet all the checklists and all the points required under the GFOA program. Next slide, please. So that is the conclusion of my presentation regarding the results of the audit. I'd like to open the floor to any questions that you may have.
Good presentation, Greg. Thank you. Helen, what other trustees did you say were on? Linda Good, I see her. Hello, Ms. Good. Good afternoon to you. Unmute yourself so we can hear you, please. There you go.
Okay.
Yeah.
Great.
Yeah. Good afternoon to you. Thank you for joining us.
Good to see you. Ms. Peterson, thank you so much for that presentation. I actually followed it, understood it. Of course, it helped that I read the 141-page report that we were given. Why on earth would I ask any questions about such a stellar report?
I agree. Yeah. It was a great audit when you look at it. I mean, when you look at the results of it, unmodified opinion, no control deficiencies, no significant deficiency. I mean, that's, when you're looking at things to check the box, yes, those are definitely the things you want to hear.
Absolutely. Absolutely. Excellent. This is great news. Thank you so much.
So you all set, Ms. Good?
I am.
Okay, very good. I'm not trying to rush you at all. We have plenty of time. If you have nothing further, Ms. Good, I'll just ask a question. Mr. Peterson, if you don't mind, I did notice in red font a couple of slides that said still in progress on items. Is that normal, not normal? Is it unusual? Tell me just a little bit about that, please.
I mean, I guess it's not usual, but we are kind of in some unusual circumstances right now, especially as it relates to this COVID funding that the college received. So what we as auditors really rely on is there's a document put out by the Office of Management and Budget, and it's called the Compliance Supplement. And that Compliance Supplement includes audit programs for every federal program that the college receives funding from. Well, because of COVID, they have not gone through and updated the OMB Compliance Supplement for these new funds. Okay. So what we have done is we have started testing this just based on our experience and knowledge of testing other similar programs. And they kind of give you some general compliance requirements that we can use to develop a program. So all that being said, we're trying to put this out, and they keep teasing us and telling us they're going to put out this supplement every week, and that's gone on for about 2 to 3 weeks now that we've been waiting on this to come out. So we really want to see this official document come out with all the compliance requirements that are included, directly from these federal agencies, so that we don't miss anything as part of our procedures. So that's really what's kind of holding us up on the CARES Act side. We've made a few requests that we're waiting on some information from as well. Again, what we've seen so far, I don't anticipate there being any findings or compliance issues thus far. So from the federal side, it's just a bizarre situation we're in with receiving this COVID money without an updated compliance supplement. On the state side, the skills program is actually very close to being completed. We just have these 1 or 2 dangling items that are out there that we're just waiting on information back from the college. So once we get that information, we should be able to sign off on that fairly easily and quickly.
Sounds good. I'm looking for Jennifer, but I see a circle in motion, so apparently she's not on. Helen, do you know?
I see Jennifer. She needs to unmute. Are you there, Jennifer?
Okay. Very good. Well,
I am there.
Okay. Hi, Jennifer. I'm sorry. It must be on my connection on my end. I apologize. Do you have anything that you want to add, and or we set to bring this before the board without any issues other than whatever questions might come up?
Thank you. So I actually do have a presentation prepared that we will get to in a bit.
All right. I don't see, Helen, can you pull the agenda back up for me, please? I'm done with this section, I guess.
Okay, great. Link will do that for us.
Okay. Thank you, Link. Internal audit update. Is that?
That is Letty Charbonneau.
Okay.
Yes. Yes, hello. Can you hear me okay?
Yes, ma'am. Sure can. Hear you and see you. Go right ahead. Thank you.
All right. Thank you. So Letty Charbonneau, Executive Director of Auditing Consulting Services. So good afternoon. Thank you for the opportunity to for me, sorry. Thank you for this opportunity to provide a short update on internal audit activity. So those are the 3 topics I'm going to be going over today. So next link, please. All right, so I'm going to start off with an external audit evaluation, just a few comments about this year's external audit. From my perspective, the external audit team has sufficient experience, technical knowledge, and are appropriately supervised by the manager and partner. The relationship between the external auditors and management appears appropriate. So basically this means there's no perception that the auditors lack or appear to lack objectivity. Next slide, please. All right, before going into the II standards, I do want to commend the financial operations and facilities staff for their work preparing the CAFR. So as you all see, it's a very large document, so kudos to them again for that work. These next 2 slides are just an overview of internal auditing. The Institute of Internal Auditors sets the standard for the practice of internal auditing and defines internal auditing as an independent, objective assurance and consulting activity designed to add value and improve an organization's operations. Next slide, please. This is just a general overview, comparing internal audit to external auditing. The main point here is that internal auditing considers different categories of risk, and we focus on efficiency, effectiveness, and compliance of operations. Whereas external auditing is mainly focused on the accuracy and validity of the financial statements. Next slide, please. So highlights for fiscal year 2020 include the completion of a peer review to assess our department's compliance with the professional auditing standards, an outcome of which was the change in reporting structure, with ACS now reporting directly to the Chancellor. And then for more information on our fiscal year 2020 activities, please see our annual report that was completed in October. Next slide, link. So we have 11 projects approved in the fiscal year 2021 annual audit plan, and this slide just gives you a status of where we are at this point with these projects. So we've completed 2 of the projects, and we've got 4 that are started and in progress. Next slide, please. And then here we're just showing the ones that we haven't started. So we've got a total of 5 projects that we haven't started. 2 are scheduled to start in early spring. And then next slide. So we track implementation of management action plans in response to audit recommendation. Currently, there's 12 management action plans with implementation in progress. So most of these relate to recently issued reports, so that's why they're still showing up as pending. And I've got a breakdown by cabinet member just as an FYI. Next slide. This slide provides just a count of the reported potential fraud incidents that came in for us to manage. We currently have 11, and all of these have been closed already. All right, next slide. So, that's the end of my presentation. I again want to thank the trustees and the chancellor for their continued support. Do you have any questions on the information presented? I know we went through that pretty quickly, but if there's anything you need me to go back to.
No, Ms. Good, do you have any questions?
No, I don't. Thank you, Letty.
Okay.
Thank you.
Same here. Thank you, Letty. Next item, please. That is definitely Jennifer.
Yes, this is me.
Fire away, my friend.
Okay. Thank you. Link is making me presenter, so I can share my presentation.
You should be set now, Jennifer.
Yes. It should be up. Everyone can see this?
Yes.
Yep.
Okay. Thank you. Good afternoon. Thank you, board members, for taking the time today. And thank you to Weaver, the auditors, and Ms. Charbonneau from internal audit. Everyone puts in a lot of work to this report. Trustee Good mentioned reading the 114-page report. I have
141.
141.
Yes.
Yes. Yeah, of course, I printed it out on my home printer here, so I have it as well. And this was provided electronically to both of you last Thursday, but it is definitely a lengthy report that a lot of work goes into. So a huge thank you to everyone throughout Lone Star College who puts in many hours into this report. And before I get into my presentation, I do want to go back to some of the kudos that Mr. Peterson mentioned during his presentation, because I am actually quite excited about some of what he mentioned. So this is their third year in a row at serving as our auditor. And I wanted to mention that in the first year in 2018, there was actually 7 findings. I mean, in every year they have given us an unmodified opinion stating that our report is materially correct. But in 2018, there were 7 audit findings. In 2019, there were 3. So I consider it very exciting that this year we have 0 audit findings. And for that, again, a huge thank you to many throughout Lone Star College who have put in work over this past 2 years to get all of those audit findings corrected, and to continue to do everything else as well, so that this year we have 0 findings. So I did want to make sure that was highlighted, that we had that. So for my presentation, and perhaps to provide some context here, right, first you hear from the external auditors who provide you their opinion as to whether the comprehensive annual financial report that we put together is materially correct. And then, of course, internal audit provides their review of that as well. So the value that I hope to provide today is to actually talk about what is in the report itself. What was the outcome of our financial activities for our last completed fiscal year, which was fiscal year 2020. And so that year is what began September 1st, 2019, and ended August 31st, 2020. So I do want to mention that we are designated as a special purpose government engaged in business type activities, and this does affect how we are required to report our financials. And I think this will become clear in particular when I get to showing the income statement and the result and how that is presented. So first, again, I set up a lot of this trying my best to provide some context for reading an annual financial report. There are 3 key reports. Of course, there's many footnotes, supplemental notes that are also very important to read in this report, but there are 3 key financial reports that summarize the college's financial position. Those reports are the statement of net position, which is more commonly referred to as our balance sheet. There is the statement of revenues, expenses, and changes in position. This report is often commonly called the income statement. And then there is the third report is the statement of cash flow. All 3 of these reports fit together sort of like a puzzle, maybe more like a map with the balance sheet at the August 31st, 2019 date and the August 31st, 2020 date as sort of being your starting point and your destination. They are points, in this case, points in time that report all of our assets and all of our liabilities as of that particular day. So those are points with The income statement sort of being the roads that we traveled in between. The income statement reports the activity that occurred that gets us from sort of the point A to the point B. So these do work together, these statements. And similarly for the cash flow statement, this takes a subset of the balance sheet, one row really, the cash and cash equivalents. Again, from the balance sheet, you have your starting point and your end point, with that cash flow statement providing all of the activity that occurred between those 2 points. So I did want to provide that context into how these reports really fit together and provide a picture, a complete picture of the college's finances. Okay, so getting to the financial results. So our starting point, August 31st, 2019, our net position was $218 million. We ended this last year, August 31st, 2020, at a net position of $138 million. And this is, I have to clearly report that we did decline in our net position by $80 million. And so you would see that on the income statement. Our net income was a negative $80 million. And then the net positions, just make sure I'm providing that context as well, that is how much our assets exceed our liabilities. So we are, of course, in a positive net position, but this last fiscal year, we did have a significant decline in that net position. Now, this is going to be a common theme throughout this, and at the very end of the presentation, I'm going to talk more about the primary driver of this decline in our net position, which is our pension and our OPEB liabilities. OPEB is other post-employment benefits. And again, I am going to go into those in more detail towards the end. But for now, keeping to sort of the high-level results, sort of my continued theme throughout this is illustrating the impact of those two items. If we were to adjust and remove those two items from our financials, we would have increased our net position this year by $38 million. If it were not for those two liabilities, which of course we are required to report and are very real liabilities that I will talk about. But I wanted to illustrate the effect of those two items on our financials. And you can see that further in the history table that I have on the slide here that shows you the two columns, the first column being what our net position has been, the column with the asterisk showing you what it would have been adjusting for those two items. But again, we did have a decrease in our net position of $80 million. So showing more detail on this income statement, we did have operating revenues last year of $122 million. And it is key there to know that that predominantly is just our tuition and fees. Because we have to report as a business type activity, property taxes and state appropriations are not included in operating revenues. So operating revenues was as if we're a private business and we're not receiving those two income streams from taxes and state funds. We would have had we did have operating revenues of $122 million. Now, but when it comes to our expenses, of course, we do receive property taxes, which is our largest revenue source, and we do receive state funds. And the intent of those items is to offset the cost of education to students. So our operating expenses is everything that we do. So our operating expenses was $588 million in 2020, resulting in an operating loss. And like I said, because we have the property taxes and the state funds, having an operating loss is expected in our context. So then it is when you look at the non-operating revenues, the $387 million, that is where the property taxes and state funds show up. But of course, putting all that together is what gets us to the net income where last year we had a positive net income of $26.6 million. This year, as I already showed on the prior slide, we had a negative net income of $80 million. Now, again, with, like I said, what will be my sort of recurring message here is that the predominant driver of this negative $80 million is those pension and OPEB liabilities. And to illustrate the effects of that, I've shown at the bottom here what our net income would have been with those items backed out. So there we would have been a positive $38 million in net income had we, if removing those two items. So again, those are a significant driver in our financial results. Reporting on our cash flow statements. So here again, sort of our beginning and our endpoints from the balance sheet. Cash at August 31st, 2019 was $152 million, and we ended the year August 31st, 2020 at $135 million. Here, I do want to note that typically at the monthly board financials, I report on our cash reserve balance, and that is around $67 million. I want to note here that that is specifically, right, our cash reserves, whereas this, the $135 million, this is all of our cash. So it includes the cash reserves, but of course includes other funds on top of that. So this is reporting on all of our cash. And here you can see that we did have a decrease, a net cash outflow in 2020 of $16.6 million. Now here in this regard, I want to note that the pension and OPEB liabilities is not a significant driver of the cash flows because as I will lay out, the pension and OPEB liabilities and those expenses are largely a non-cash expense. So they are not the driver here. The driver here is that we do continue to have our 2014 bond program where we issued debt in 2015 and again in 2017 and received that cash to use on construction projects. And as we continue to build the new buildings that we've had go up, we have 2 under very active construction right now. That tends to result in a net cash outflow. And here to illustrate the effect of that, our net cash flows would have been a positive $2.2 million, adjusting for what we spent on the construction of capital assets. And so that point here is really further illustrated here. So we continue to have a declining cash balance each year as we spend down the bond program is something to be expected as that occurs. So right last year we had a cash outflow as well of $36 million, this year of the $17 million. On the balance sheet, again, I kind of started out with laying out where our net position is. This is just to show that of that net position, it does get broken out into a few different components. One being net investment in capital assets, which for us does continue to be a very healthy net investment in capital assets. And then there are some restricted amounts for debt service, which leaves us with an unrestricted net position that is negative, right? Our overall net position is positive, but a lot of that is in that net investment in capital assets. So our unrestricted net position is negative. And there, again, I am noting the impact of the pension and OPEB liability. When you look at the history table on the right, the first year that we were required to report the pension liability was in 2015. And you can, of course, see the decline there. And then the OPEB liability, the first year we were required to report that was in 2018, which is when you again see the next significant decline in that unrestricted net position. So in this regard, that pension and OPEB sort of does continue to be the primary driver of where we do see some concern certainly showing up in our financials. So that brings me to my final slide, which is, of course, this item that I keep mentioning, this pension and OPEB expense. So first, I might just start with explaining a bit about what these are. So the pension liability and the pension expense, of course, our employees, many of them, they do have a choice between two options, but for many of our employees, we have promised them, right, a defined benefit, a pension system. We've promised them that in retirement, they will receive a pension from the TRS system, which of course we are a participant in. OPEB is other post-employment benefits. So this is a similar concept, but it is for healthcare, life insurance, and dental insurance benefits for retired employees. So here, in a similar way to our employees, we have promised them that in their retirement, these costs will be covered. Again, here we are a participant in the state ERS system. Sort of similar to, if you have young kids and you promise your kids that you are going to pay for their college, right? This is an expense now, a liability that you have taken on that you will have to pay out in the future. So this is where these do become an obligation of future payments. Now, I'm just trying to go with my example of if it's being somewhat similar to, right, if you promise your kids you're going to pay for their college, when you initially make that promise and they're not yet in college, right, your actual cash expenses are probably pretty minimal, if anything. But of course, you are facing out in the future a large spike in your expenses once, say, the first kid starts that first year of college. There is a significant increase in your expenses anticipated in the future. And that is effectively what we are facing here. Now, again, if I were to just continue with my example, managed well, a parent might start saving for their college, for their kids' college 10 to 15 years ahead of time. And that, in some ways, is some of what is reflected by this non-cash expense that we are required to include in our financial statements, because it is that anticipated expense that will be a future obligation for us to pay out. Now, like I said, so saving ahead of time is a good a way of managing this. So looking at these two items, of the two, so pension is the smaller of the two. This one increased our expenses this year by $15 million. Now there is already effectively a savings account out there in the TRS system. And in 2019, there was a legislative bill that had the goal of improving the funding of that pension system between 2020 and 2024. So here, I do believe that over this period of time, that liability, I think, should hopefully begin to improve as contributions from both employers and employees is increased over time. And there, that $15 million alone, that could have been, we could have absorbed that expense and still improved our financial position. So that is where I do want to highlight for everyone here that I think the main concern then becomes the OPEB, these other post-employment benefits. Here, effectively, if I'm going with my example of saving for a kid's college in the future, we are not saving for the future costs of other post-employment benefits. We are recognizing the expense in our financial statements, and we are recognizing the liability, but we are not actually setting aside funds ahead of time to save for this future cost. So here I have thrown out, this is literally just me throwing out a few to get college to start thinking about what we might do to address this going forward. One idea, and so these three ideas I think really could potentially be used in conjunction with each other, not necessarily as a either or. But here one idea is we could start including these pension and OPEB non-cash expenses in our annual budget. This is not something done today, so a key piece of that for me is, of course, board, and when I present monthly reports on it, since March, I've been telling the board that we are decreasing our expenses, that we made budget reductions, that we had spending freezes. And all of that is true on items that are included in our budget. But as I mentioned, these pension and OPEB expenses are not included in our budget. So it does unfortunately come in as somewhat as a surprise at the end of the year when I've been telling the board, right, for the whole year that we are reducing expenses, and then I come here with a financial report and report that our expenses actually went up by $112 million. So that is one item I thought I wanted to throw out here. It would have the effect also of increasing our cash reserve requirement by $16 million, which is significant. But to think about, and then a couple other ideas is if we did, as a college, want to start sort of saving ahead of time for these future costs. Some institutions in other states I found, and my team found, are looking at setting up their own trust funds to contribute towards this future liability. And then we could also advocate that the legislature, that ERS system, set up a fund to accumulate in advance, as in a similar fashion as the TRS system. So I did want to kind of share those initial ideas. This is definitely long-term items that I do believe the college needs to begin thinking about addressing if we want to see our financial position improve over time. So that concludes my presentation, and I am happy to take any questions that anyone may. Thank you.
Thank you, Jennifer. Linda, before I call on you, I might just jump in real quick. Jennifer,
Sure.
You might appreciate the attention to OPEB this year, because you might remember that I just raised a stink during last year's audit committee meeting about OPEB, and I didn't feel as though we were properly addressing and accounting for the potential financial liability. So I don't know if that instigated the attention to it this year or not. It doesn't matter who gets the credit, I'm not looking for credit, but I do want to thank you for giving it the attention that I think it deserves. Ms. Good, do you have anything?
So my question is would this be an appropriate time for me to ask questions based on having looked at this report?
It is in my eyes, yes, ma'am.
Just Jennifer, is there something else, or should I ask my questions now?
Yeah, please, happy to address your questions.
All right, there are probably nitty-gritty details, but bear with me. On page 75, where it's talking about post-retirement health care and life insurance benefits, I noticed that the cost of providing health care insurance in 2020 is 372% higher than it was in 2019, but the number of retirees only increased 4.5%. That seems like an extraordinary jump. To go from 22 million to 107 million in 1 year. Can you help me understand how that happened?
Yes, so you did, sorry, on my side, pause a little bit. So I don't know if I missed a particular page that you were looking at.
I'm looking at page 75 of the CAFR. And it says number 16, post-retirement health care.
Yes, so a much lengthier note is also note 20 that starts on 79. It's a quite lengthy note that goes into detail about post-employment benefits.
Okay.
Now here, so the key change that affected this is, of course, so an actuarial study is conducted that forecasts all these future costs. And then you have to determine a discount rate to estimate what those future costs, what the value of those future costs are today. Now, so what happened there is because there is no fund here, they have to use the municipal bonds rate, and that rate decreased from 3.96% to 2.97%, and that is reported on page 81. So we had a full percentage point decrease in the rate that has to be used to estimate what is the current value of these costs. That is the primary driver that caused it to increase from last year to this year.
Okay.
Yes.
All right, great. Thank you. Some of these are just comments. I was surprised to see on page 120 that our district employment is almost double what it was last year. I mean, we knew COVID had hit everybody hard, but that was just a surprising thing to see.
Yeah.
On page 122, part of the statistical supplement, I was a little disappointed to see that we don't seem to be making progress in our full-time, part-time faculty ratio. We had set a goal quite a few years ago to try to achieve 50-50. The closest we've come was in 2014, 31% full-time, 69% part-time. And every year since then, except for 2016, there's been a decrease. So it seems to me like we're headed in the wrong direction. I realize that part of that is impacted by the fun we had after Hurricane Harvey, but couldn't.
So here, let's see here. So if you're looking at these counts, I could work on a report that maybe can try to walk you between the two things. But so this is reporting on the count of employees, and it doesn't necessarily reflect how many courses any of those particular employees taught. So typically that goal we have of 50-50 is how much of our courses are taught by the full-time faculty versus the adjuncts, the part-time.
Okay.
And so that might be sort of a separate reporting thing I can work for you, where the count may not necessarily be a direct reflection of how many courses are being taught by him. So I would want to work on that for you.
Sure. Future project. Okay. Thank you. That helps me to.
And I believe we already have some separate reports built for looking at that, since that is one of the goals.
Okay.
It's not necessarily something that shows up in this report.
Sure. Okay. Do we have any data on transfers to out-of-state senior colleges? We have a lovely list of transfers of our students to public senior colleges in Texas. I just wondered if we had anything showing the colleges outside of Texas that our students go to.
Trustee Good, this is Helen. If I may, we do have that report, and I can have them run an updated one for you.
Sure.
It's quite lengthy.
It's not anything anybody needs.
It's very impressive.
Right. It's not anything anybody needs to do in the middle of the holidays or anything like that. I was just kind of curious. I wanted to see where they went. But, okay.
We'll get on that for you.
No problem. And then my last two questions. Pages 128 through 131 says it's a single audit section. My pages are all blank. And the same thing with the schedule of findings and questions of cost. I've got 4 blank pages. What was the point of that?
So those are the placeholder for the external auditor's report. Mr. Peterson's presentation kind of it gave you what is going to eventually show up on those pages.
Okay. This does say it's a draft report, doesn't it?
Yes.
Now, Linda, do those pages say this page intentionally left blank?
No, it doesn't.
That's what we're used to seeing, isn't it?
Right. It just says audit report and then it's blank.
Okay, good question.
Right, and so when we issue the final one.
Okay.
So I guess in that sense, we didn't put intentionally left blank on them because our intention is to put those pages there once we have that final word from the external auditors. So when we print the final version of this, those pages will be there. And there will be no intentionally left blank statement.
Thank you. That's it.
Good questions. Thank you. Thanks for reading all 100 and whatever pages.
141.
It was my turn last year. It's your turn this year. We're not auditing the auditor this year either. That's behind us now. Okay. Let's see. Questions. Ms. Good?
No, that's it for me.
Ken, do you have anything else? I'm not rushing you, but
No, that we're good.
Okay, Ms. Mott?
I can remember to do, it is a 141-page report, and you just continue to look through it. If you have any other questions, please feel free to send those over to me.
Okay, sounds good. And just a little housekeeping here to help me. I'm going to assume that I'll tee this up at the board meeting on the agenda item and turn it over to Dr. Head and then to you or something along those lines.
No, Mike, we want you to do the presentation.
Okay, well, it'll be very short. Very short.
So there, the board agenda item does read for the board to accept the audit committee's recommendation. So Helen,
Alrighty,
meeting that technically,
some of that, but not all of it.
will be considered to be the audit committee recommendation for the full.
Sounds good. With that said, Ms. Good, drawing on your experience from years past, would this be an appropriate time for the committee of 2 today to make a recommendation to the board that it be accepted?
Yes.
Okay.
I so recommended.
Sounds great. Then I concur. All in favor say aye.
Aye.
All opposed say nay. The ayes have it. The 2 trustees present and participating in today's audit committee meeting accept the CAPR as proposed and will present that to the board. Helen, is that appropriate? Think we're covered?
Yes, sir.
Okay. And feel free to modify the language to meet the intent, please.
Okay.
Okay, thank you. Ms. Mott, is that appropriate in your eyes? Are you okay?
I believe that works, yes.
Okay,
thank you.
Very good. Yes, ma'am. Do we have anything else on the agenda? I see item 6 is adjournment. I don't think I thanked the external auditors as chair of the audit committee this year. I do want to thank you for your work and your presentation. It does not go unnoticed, so thank you for your hard work. Mr. Peter.
Thank you very much.
Yeah, you bet. Is there anything that y'all need from us?
No, I don't think so. Like I said, once we complete those single audit report or those single audits, we'll update those pages in the report, so they'll no longer be blank.
Okay. And will you be present at the board meeting? virtually?
Yes, sir. Yes, sir. Yes.
And Jennifer, I guess you would call on them if you saw fit to do so?
Yes, we can do that.
Yes.
Mm-hmm.
Okay. I'm not advocating it. I'm just saying that they work for you, they'll report to you in the meeting. You'll call on them if you think they need to be engaged, right?
Yes.
Okay. All right. Sounds good. Helen, may I adjourn the meeting if Ms. Good agrees?
Absolutely, go.
Okay. Ms. Good agrees with an adjournment, then this meeting's adjourned. Ms. Good, thank you for coming into the virtual meeting today. I do appreciate it. And Helen,
My
Lee,
pleasure.
Jennifer, thank you all as well. And let's everybody get back to work.
All right, thanks.
Good
Bye.
job, Lee.
Bye.
Thank you all.
Good day.